Okay, this is a big one to cover, but let's try. Welcome to crypto in under 5 minutes. So first and foremost, crypto is digital money. Most people use it just as they use traditional government-issued money or fiat. It's used to send money to family and friends abroad, invest in assets they think may increase in value, to purchase things. So as much as people may initially find crypto complicated, it's not all that different from traditional money or stocks and shares. Now, what is notably different is that there are no banks or middlemen involved. So how does this work? Well, instead of a bank managing transactions, everything is recorded on a big digital ledger. Think of it as one giant spreadsheet, visible to everyone, and is called the blockchain. Each time someone sends or receives crypto, the transaction is verified by a distributed network of computers. They all agree on the details and timestamp it, reaching consensus together and not relying on any one authority. This is what makes crypto secure, transparent, and decentralized, a money system that runs on code and community, not banks and borders. Now, whereas you would normally hold your money with a bank, with crypto, you can custody your assets yourself in a digital wallet and move funds internationally in minutes, not days. Of course, with self-custody, you are solely responsible for your crypto. Many people, when they start out, use an exchange such as Binance to hold their crypto, so they have a centralized entity holding custody. For many, this is a reassuring route. If you lose or forget your password, you can reset it. If you hold your assets in a crypto wallet and forget or lose your seed phrase, which is your wallet password, you lose access to your crypto as you are the only person in charge of your assets. Now, here is where things get really interesting. Not all blockchains are the same. Bitcoin was built to move money without banks and ended up becoming an effective store of value due to its limited supply, while others like Ethereum, Solana, Cardano, and many others are designed to be programmable. There are many different blockchains, and think of them like various operating systems like Microsoft or Apple. Businesses and projects can build on top of them apps, games, and marketplaces. A hot topic at the moment are real-world assets. Think real estate, physical art, or cars, real assets, but with their ownership or title deeds committed to the blockchain, transparent and trackable. Blockchains like Ethereum, Solana, and Cardano each have their own native currency, ETH, Sol, and ADA, which are used to power the network and pay for transactions. But it doesn't stop there. Many apps and projects built on top of these blockchains also launch their own tokens, which operate within that ecosystem. So while ETH is the main currency on Ethereum, thousands of other tokens also run on it, like currencies within the app, using ETH behind the scenes to function. Think of the blockchain as the platform, its native token as the fuel, and the app tokens as the in-game or in-app currencies built on top. And here's why people invest in them. When you buy crypto assets, you're not just buying digital money, you're essentially buying a stake in that ecosystem. Think of it like this. Bitcoin is increasingly seen as a store of value. Altcoins, which are all the other crypto assets aside from Bitcoin, power the systems being built, like owning shares in the future of the web. People believe that as more developers build on these platforms, more users will follow, and the demand for those native coins will also grow. So just like stocks will rise when a company performs well, crypto tokens can rise when a blockchain gains adoption. That is why people invest, not just to trade, but also because they believe in the technology, the growth, and also the potential of these networks to power a new kind of internet. So then there are stablecoins. Stablecoins like USDC, USD1, and USDT are cryptocurrencies pegged to the US dollar, and they are very important. Say you've invested in a crypto asset that has seen some price volatility, not out of the ordinary for crypto. You may wish to lock in gains at a particular price. Stablecoins allow you to essentially exit the market into a dollar value. Then you would sell those stablecoins for fiat currency if you wish to move the value back into traditional money. So what is crypto? Crypto is the financial system as we know it, reinvented for the internet age and giving you more control over your finances. Whether you're an institution diversifying investments for clients or whether someone is just trying to send money home to family, it reinvents the very idea of value and ownership for everyone across gaming, sports, entertainment, fashion art, real estate, and much more. And yes, we are still very early. Well, that is all for the video, but we hope you enjoyed it. Maybe share it with someone that will also find it useful. This is Jessica signing off.